First, I'd like to thank all the sponsors who made this event happen so we could all be here today. I think this is a first for the Mobile Payments Conference. A big congratulations to Marla and her team for quickly transitioning to a virtual trade show. I'm sure we'd all rather be here in person, but the Mobile Payments Conference team has done an amazing job at adapting to change in our environment. Adapting to a new environment is critical. We're all accustomed to the typical ups and downs of cyclical business trends, but you can never predict when an event happens that changes everything. One day everything is normal, the next day everything comes to a screeching halt. For many businesses that are our customers and your customers, COVID has been a cataclysmic event that is forcing the entire business and industry to adapt quickly, to change, to survive. In addition to fighting off the pandemic, businesses must also fight to make sense out of a constantly changing and evolving and many times contradictory slew of business rules that are not following the normal legislative process. Despite this, it is encouraging to see how many of our neighbors, our colleagues, our friends, our family members are finding ways to adapt to the constantly daily changes to keep their businesses alive. Small businesses especially, retail and restaurants that form the backbone of our local economies, they've been hit very hard. And the ingenuity that's being applied to keep them servicing their customers is phenomenal. Overnight, businesses have adapted to drive up, take out, order ahead, and delivery services, just to name a few. For our industry, when the consumer shopping and purchasing behavior change, the payment experience is the next thing to change. Over the last few years, mobile phone-based wallet adoption has grown, but transaction count and volume migration from traditional card transactions has been slow. It's been steady, but it's been slow. One thing that we found is it turns out that the convenience of taking out your phone and tapping it on a terminal is not much different than taking out your card and tapping it on a terminal. Convenience was one of the main parts of contactless. Now, however, as consumers are making major changes to the way they shop, they're making major changes to the way they pay. For many merchants, this is no longer an option to swipe or insert your card into the point of sale terminal. Traditional card-present businesses are moving to online payments for takeout, delivery, drive-through, and many of these merchants are now only accepting contactless in a card-present environment. We're already seeing this behavior change drive significant growth in mobile payments. We're also seeing merchants accept alternative payment methods such as Venmo and Zelle. I think if you had come to a couple of the other sessions today and yesterday with US Bank and early warning systems, you got a feel for how quickly Zelle is evolving to be a payment method for small businesses. All of these shopping and purchasing experience will continue to have a big impact on our payment industry. One thing for sure, merchants will adapt to survive, and the innovations that come from our industry will be there to help. In our industry, we're typically helping our merchants accepting credit cards, and it's easy to forget that small businesses use credit cards to make purchases. So today, we're going to be discussing innovations in small business card issuing that are also changing merchant spending behavior. We know that the market size for small business is vast, with over 6 million businesses in the US. Small businesses spend over $750 billion on credit cards annually. While this is a pretty large number, the majority of this spend is really the top tier of small businesses. The very vast majority of SMBs completely overlooked by your traditional card issuers. These same small businesses that we're talking about are the hardest hit during the forced shutdown. These businesses are facing issues with accessing working capital beyond the PPP and the EIDL stopgap funding measure loans. Their workforces have been severely impacted, and many won't return to work. Many of these businesses will face the added one-time and ongoing expenses of facility cleanings. And many will just have to adjust to a completely new business model without storefronts as we once knew it just a few months ago. All of these factors here have further strained the SMB card issuing market. Because of the volume being decreased on the acquiring side, there is much more risk on that side. There's a lot of unemployment. All of these things are making it much more difficult to get small business cards issued to small businesses. Even prior to COVID, many businesses face the chronic financial challenges. I'm sure you have all seen this in your experience as well. In a recent survey by the Fed, over 64% of SMBs struggle with obtaining financing for just paying basic operating expenses, obtaining credit card, buying inventory and supplies, and paying down prior debt. These are just the typical problems that small businesses have. Interestingly, the same survey showed that many of these businesses use personal funds and personal credit to cover shortfalls in the business. In addition to reducing operating costs by cutting staff and staff hours, that seems to be one of the easiest options for businesses to control their costs. However, it can be at the expense of service. We should not underestimate the impact that using personal credit to fund a business has on the business owner's FICO scores. This can create a lot of hardship for the business owner in their personal lives if they try to refinance their house or get a car loan or to help with other student loans for their children. If they're using personal credit for their business, it's going to hit their FICO and it's going to impact them in their personal lives. The reasons that small businesses rely on personal cards, that's very difficult for traditional small business card issuers to assess the risk of these businesses. There are many reasons for that, and related to the typical underwriting processes that issuers use. Typical underwriting issuers, they look at small business the same way they would underwrite a consumer card holder. They don't necessarily account for the cash flow cycles that businesses have, just the nuances of different types of business. Or they don't recognize the potential to cross-sell multiple banking products to the same merchant, such as merchant services, 401k, SEP accounts, and just regular depository accounts. As a result, traditional banks only approve approximately 30 to 35% of all card applicants and completely turn down the rest. So when you think about how many small businesses get turned down, it's a lot. With our work with Mercator Global Advisors, the underwriting process was analyzed at many of these banks. And these 5 factors were very common areas where traditional underwriting fails small businesses. One, just the lack of understanding the business sector completely. Underwriting strategies that have no flexibility. Very small credit lines to offset risk. A very long onboarding process that can be measured in weeks or months. And very low incentive and card rewards. Based on this data, Mercator's research also identified the key components of a successful issuing program. That includes looking at small businesses holistically with multiple banking products to mitigate financial risks, and then match the rewards and incentives to the level of risk. Additional risk mitigation tactics include putting in real-time account level controls to monitor spend, not just by the bank, but also the business owner if they have multiple people within their business using card products. We looked at this problem and we have taken a completely new approach to small business card issuing to address the high turndown rates of traditional small business issuers. We developed a card program specifically designed for ISOs and acquirers. who already understand the small business market and who already underwrite merchants in this market. With PayVus, our product, ISOs and acquirers merchants are issued a MasterCard World Elite Small Business Credit Card. This is a business MasterCard, just like any other MasterCard. It's issued in the name of the business and has a revolving line of credit, and merchants can use this, anywhere MasterCard's accepted. There we go. The award-winning and patented difference is that we split settle a portion of the merchant processing receivables to their PayVus card, and the remainder goes to their business banking account. The combination of the revolving line of credit and the portion settled to the card provides your merchant with the purchasing power that they need to run their business. Buying supplies, travel, expenses, inventory, or just average, ordinary, everyday business expenses. Additionally, we're providing revenue share to you, to the ISOs, to the acquirers, on all the funds that are settled to the card. Our clients, ISOs and acquirers, typically use that revenue share to improve their margins, reduce merchant services fees, or both. The split funding feature is unique in that the card is being funded during every settlement cycle. This enables us to evaluate merchant risk in real time. And because of this approach, we're able to approve 99% of all the applications that come to us that already have an existing merchant processing account. We designed our system to work with any merchant processor. No changes are required to the point of sale system. For larger ISOs, we also have white label version. We're seeing a much bigger demand for this now, where our ISOs and acquirers have a custom card, custom website, and this is becoming a great opportunity for ISOs and acquirers to reinforce their brand with their merchants. 5, 6, 7 years ago, it was very common for ISOs to have their own custom point of sale terminal, but that seemed to reinforce the expense side of doing business with that ISO, versus card issuing provides a much richer experience for their merchants. So when all said, your merchant gets a credit card with a line of credit and reduced merchant services fees that's extended by their merchant acquirer. Our ISOs and acquirers get a significant revenue stream and a value proposition that enables you to obtain new merchants, create increased loyalty, and in many cases, our resellers generate more revenue from the issuing side than they do on merchant services. That is why we're saying that issuing is saving acquiring. We've also made partnering simple and turnkey. We completely automate everything from underwriting to card production to cardholder support. We've really taken what is done on the PayFac model on the merchant acquiring side and applied that to the issuing side. We can underwrite merchants in a matter of minutes versus traditional small business card issuers that can be weeks or even months. So we know that the merchant experience expectation is on the acquiring side, they want their merchant account done immediately. We can now extend that same experience to the issuing side. I do have a quick video here that we can play, and then we'll come back for some questions and answers. Let's see if this works.
I love running my own business, but to be successful, I have to stay focused on managing cash flow, lowering cost, increasing sales, and obtaining financing to help my business grow and to meet my business goals. Fortunately, I have the PayVus program. PayVus is a bundled business solution that combines credit card acceptance and a business credit card into one single product, which helps me better manage my cash flow and makes accepting cards more cost-effective. My customers are happier because they can pay however they want. There is no change to the card acceptance process, and I accept cards and settle like I normally would. PayVus offers me a business credit card account with a line of credit in my company's name with no personal guarantee. I have the ability to send a portion of my settlement to my PayVus card, which will increase my spending capacity. I can adjust the amount whenever I want to better meet my needs. It's great because now I can see my sales and how much I'm spending all in one place. Being able to accept credit cards makes running my business much easier. Now, instead of waiting for invoices to process or checks to clear, I get paid right away, which really helps my cash flow. Plus, the PayVus Business Credit Card gives me greater purchasing power and the flexibility to buy the things I need. Now, I can afford to be more competitive and my business is really growing. Plus, my customers are able to spend more because they can pay how they like. It's a win-win. With immediate payments, a line of credit, increased inventory, and sales, the PayVus bundle offers me exceptional value and makes my life as a business owner that much better.
So in summary, credit cards, they play an important role in how small businesses operate. It's a very big market opportunity. It requires new thinking in how to reach it. With PayVus, there's a unique opportunity for ISOs and acquirers to generate significant revenue while providing an extremely valuable financial tool for their merchants. Innovations like this and many others that you've seen at the Mobile Payments Conference this year are helping merchants get through their businesses up and running even during these difficult times. I'm going to turn this over to some questions. Bring back the main screen here and show. And, okay. So thanks everyone for listening. We have a couple of questions that are coming in. I think one of the question is, do you work with any acquirer or processor? And the answer to that is yes. We interact and integrate with First Data, with TSYS, with Global, all of them. That enables us to make sure there's no change to the point of sale, no change to their merchant account, none of that changes. So we're able to quickly integrate with that. I think there was a question about, I'm thinking that acquirers turning to PayVus would be smaller businesses. I would say it's the typical SMB segment. There's many different MCC codes that will apply. What we're seeing is that right now the types of merchants, they're between 1 and 10 million annual processing volume. And we're starting to see that change as well. But it works with just about any type of small business. There was a question about the custom card and white label program. We're seeing a lot more demand for that now, and you're going to see a lot of card programs in the market that look like PayVus because they are powered by PayVus. They just have a custom ISO logo on them, or all of that. If you're interested in more information on the program, our virtual trade show booth is open. We've got people standing by, so either reach out to me or anyone on my team. Great. I think we can keep the questions going here for a little bit. A typical merchant that is best for PayVus, it's a good question. So I can give you some really interesting use cases. So we've had a few merchants that their owners of the business had very difficult time obtaining credit. They had pretty low FICOs. And I'm sure that if there are merchant service providers out here, you'll know that there's a lot of the trades folks, plumbers, electricians, HVAC, those type ones. They can run a very profitable business, a very high transacting revenue business, but the business owners don't necessarily have the best FICOs. And if they try and go to a bank to get a loan or a line of credit, they won't always get one. If they do, it's a very high rate. So what we're seeing is that the merchant segments and the types of merchants that are having the most success with this product are in are in that the trades, plumbers, electricians, HVAC, repair, credit repair type merchants. We're also seeing a lot of retail and restaurant, even though their transaction volumes have been down, they've struggled with gaining credit to purchase inventory. So the PayVus card is filling, a role that maybe a merchant cash advance would fill, or some type of short-term loan. But we're just seeing a lot of uptake in those segments. Okay, I think we're just about out of time. So I want to thank Mobile Payments Conference for having me here, and I think the show has been great. And anyone needs information, you can reach out to me or anyone else on my team. And thanks again for stopping by, and look forward to seeing you all in person next year. Thanks, bye.